Hey team, Kenya here, and in this video I had someone ask me a question about a trade that we took with KiSS strategy using USD/JPY. I actually analyzed this trade in the previous video, but someone asked me, how did you know it was going to hit your take profit level? So let me just share with you what I shared in Telegram really quickly so that I can show you exactly what I'm talking about. So I dropped USD/JPY in here and kind of showed how I was managing this trade. So you'll see here, this is the chart that I dropped, the USD/JPY. This is a 15-minute time frame. And I showed how price respected this trend line, bounced off of it, went long, and then all your other confirmations were in place, RSI, stochastic, and MACD, according to the confirmations that we follow. So I also sent this. I like to show how I'm managing the trade. So once we were in profit, I notified everyone to move their stop loss. So I said right here, when I dropped the trade, I put ideal entry 111.14. So once we were about 10 pips in profit or so, I told everyone to move their stop loss to 111.15. The reason being is that we entered down here near the trend line. So as price started to gain momentum, if price had decided to, or suddenly reversed and had gone against us, we would have got stopped out with 1 pip in profit. So it allows us to have a risk-free trade. So that is the reason why we move our stop loss 1 pip past entry once we're about 10 pips in profit. It's a great way to manage your trade. So then I put my take profit for 111.36. So at this point, I'm just kind of letting the trade do its thing. I'm rest assured that if anything, if the worst happens, I'll get stopped out with 1 pip in profit. That'll at least cover the spread and give me a few cents. Okay. So my take profit, I put 111.36. Now, how did I determine that? Let's go to my chart and we're going to actually look at that. Okay. So one of the things that I always do is I quickly get rid of the indicators, and I like to just look at a chart without all the indicators on them. You can keep the Bollinger Band on it if you want, but I just usually hide it, turn this to a 1 hour. When I'm on my cell phone, I don't hide the Bollinger Bands. I just quickly do what I need to do, okay? But preferably, I like to have all this stuff kind of planned out. Sometimes it happens at the last minute. So what I do is I grab my trend line and I just look on the 1 hour and I look to see, am I in a downtrend or am I in a uptrend? What's going on currently? So quickly I see that we're in a brief uptrend here, but we're in an overall downtrend, and I'm going to show you what I mean by that. Okay. So I can scroll out even more to the 4-hour time frame, but I'm only concerned with the 1 hour because that's where I'm doing my analysis. I'm not in this trade for a very long time. I'm looking to grab pips within seconds to minutes. All right. So we can see here that price has been going short. You see this? Overall, we're in a downtrend. So if I grab a trend line and I just basically draw a trend line across here, you'll see that price is respecting this overall trend line, which is giving us a downtrend, okay? We also have a bearish flag pattern that has formed on this particular time frame. And if you know anything about bearish flag patterns, you'll see here, you have a flagpole here, this long area here, that's your momentum. And then you have an area where price kind of consolidated within the flag. So we call this the flag. But during this time, price has been respecting this area here. So this trend line, right? So I see here that price touched this trend line once, it almost touched it twice. And now we have a valid trend line with a second touch here where price is respecting it. But sellers lost momentum there, didn't have enough strength to keep pushing price down. You have a triple wick rejection, which also gave me confirmation that price is respecting this trend line and most likely will bounce off of it. So after I determined that, I quickly, and I know this might seem like a lot, okay? If you're new, I know you're probably like, oh my gosh, how is she seeing all of that? Because I don't know, that's how I was in the beginning. But rest assured, as you keep learning and advance your knowledge, it will become easy. Stick with me. So I click on my candles and I turn this to a line chart most times. I like using a line chart because it's just much easier to kind of see the tops and bottoms. So I'm looking for tops and bottoms in the market. That's what I call it. I'm looking for major areas of reversal, support and resistance. It's all the same thing, okay? So here, I would definitely mark a level around here. And then I'd mark another level maybe around here. and I'd mark a level probably right here. Now, this does not have to be exact, okay? So if you feel like you suck at drawing support and resistance, don't feel bad. You basically just want to identify tops and bottoms, which are major areas where price respected those levels. They either they either held that area, broke through it, retested it. It's just a really pivotal area where price either respected it, bounced off of it. There were major trade decisions made in that area. So what you're going to see, for example, let me move this trend line up just a little bit. Okay. So now we have 2 touches on our trend line. And then if I turn this back to my candles, look, you'll see how price is well within these areas, right? So I know that I have wick all up here, right? Price can, this is also a channel here. If I draw a parallel channel, that's what you'll see as well. So I'm looking at this and I say, okay, we got in the trade down here. Price is clearly respecting this trend line here, all right? And then where would I want to take profit? So I trade from zone to zone. So how do I know where price is going? I look left for clues. So if I see here that price came to this level, and what did it do? It either respected it or it finally broke through it. So you see all these multiple touches here. You see how where buyers came in, pushed the price up here, tested this level, wick, and then tested it again, and then finally broke through it. See, and then where did it go to next? It went to this next level here, where previously this was an area of resistance. Resistance became support. Price continued and it broke through this level of 111.31, tested up to this next zone, bounced off of it, came back down. So this is how we get ideas of possibly where to take profit, is we look left for clues and see what has price done in the past, because what's happened in the past will most likely happen in the future. So as I continue to manage this trade, I know that I'm trading from zone to zone. My stop loss is 1 pip past my entry. So my entry was 111.14. So I moved my stop loss to 111.15. I let price do its thing. I'm capitalizing on the momentum, letting it go from zone to zone. And then I got around 111.36, and I told our team I was taking profit at that level. Now, if I just move this line down right here to about right there, you'll see there were multiple touches in that area too. So 111.36. So I decided that was a safe area for me to take profit. Although I knew that price could keep pushing up, I know that price is going to constantly go up and down, up and down. So if I want to grab me a quick 30 pips, then I see that that's probably the area where I want to do that. I don't want to get that far and then price comes back down 20 pips, or, you know, it's just up to you how you're managing your trade. But my main idea in this video is just showing you my overall approach to taking profit and how I decide where to take profit. So I'm basically looking left for clues, and I'm just going off of these major reversal areas or support and resistance to see what levels have buyers and sellers, you know, tested in the past. How did they respond to, how did those levels hold? Did sellers have more power? Did buyers have more power? What happened? So whatever happened in the past is a prediction of what could possibly happen in the future. So that's how I decide to take profit. So when you mark these lines, they don't have to be the exact areas where you would take profit, because price may not reach that area, right? So I always bring it a little bit lower just to be safe, where the body of the candle is, for example. I probably wouldn't, if I move this right here to the top of the wick, I probably would not take profit right at the wick. I more consider this as a zone, not as a line. We just want to consider it as a zone where we are going to make our trade decision. So comment on this video if that makes sense to you guys. I hope that that's clear. This is just all about how I approach taking profit and how I go through that process of determining where to take profit. I hope you found this helpful. Give me a thumbs up, guys. Give me some positive feedback. Give me some love. Let me know that this is helpful. And if it's not helpful, if I need to do something better to help you understand, I would love for you to share that. I hope you guys are having an amazing trading week, trading year, and I will see you in the next training.